Okay, so this is in continuation for the discussion for accounting for stock acquisition subsequent to the date of acquisition. So we'll be discussing some sample problems to prepare a limiting entries worksheet and consolidated financial statements, no? For 100% stock acquisition. No? First, under cost model, and then we have another video for 100% owned subsidiary, and then we're using equity model. Okay, so we have here, assume that perfect company acquires all of Sun's company's common stock on January 1, 2014 for 387,500 and an amount 87,500 in excess of the book value. Therefore, the book value of the net assets is actually 300,000. That's because it's 87,500 in excess of the book value. So the acquisition price includes cash of 300,000 and a 30-day note for 87,500. It was paid in 2014. Okay. At the end of 2014, the perfect management determined that the 3,000 goodwill impairment loss shall be recognized in the consolidated income statement. Okay. So we have here some assets, no, na nag-differ yung book value at fair value. So we have here yung inventory natin, no? So inventory natin is actually undervalued by 5,000. Okay? Then yung land natin is actually undervalued by 6,000. Okay? Then yung equipment natin is actually its book value is 70,000. That's actually its cost and related accumulated depreciation of 80. So 70,000 yung book value. But its fair value is 150,000. So it's actually undervalued by 80,000. Yung building natin, yung fair value, yung book value niya is 140,000, diba? Its cost is 300 and its accumulated depreciation is 160, so its book value is 140, but its fair value is 120, so overvalued siya by 20,000. Okay? Then, our bonds payable, okay, it was actually overvalued by 4,000. Okay, yung bonds payable natin. So, all other assets and liabilities had book values approximately equal to their respective fair values. No? So, on January 1, 2014, the equipment has a remaining life of 8 years. The equipment has a remaining life of 8 years, and the building has a remaining life of 4 years, respectively. No? Okay? But yung bonds payable natin may 4 years. Yeah. Remaining term. Then inventory sold in 2014 and in FIFO inventory costing is used. Okay. So before that, no, let's compute muna for the goodwill. No, so since we have the book value of our net asset, which is actually 300,000. Okay, no, and i-add lang natin or deduct any difference, no, between the book value, no, and the fair value of our assets, no. So we have here, diba, yung inventory is undervalued by 5,000. Yung land undervalued by 6,000. And yung equipment natin is actually undervalued by 80. Yung buildings natin overvalued by 20. And bonds payable natin overvalued by 4,000. So yung net undervaluation, overvaluation of our net assets, no? Kasi included naman dito yung bonds payable, no? It's actually 75,000. So therefore, the fair value of our net assets is 375,000. Okay. Now to compute for the goodwill, no, since we have consideration transferred of 387,500, then the less fair value for our net assets is actually 375,000. So we have a goodwill of 12,500. Okay. Now, so we have here a trial balance. So yung trial balance natin, at December 31, December 31, 2014, no, yung end ng first year of acquisition. Kasi yung date of acquisition is January 1. So yung end ng first year possession, no? So, for December 31, 2014, so, mag-prepare na tayo ng Consolidated Financial Statement. So, this is actually the, trial balance of the perfect and son, no? Perfect the period, and the subsidiary Mrs. Sun, no, at December 31, 2014. So, you take note that yung investment in Sun Company would still be at 387,500, diba? No? So, hindi siya nag-change. Okay, no? So, yan. Also, from the trial balances, no, presented. So, ito yung income statement ni parent at saka ni subsidiary. No? So, we have sales, no? Cost of goods sold, gross profit, expenses, no? So determine the net income from all operations, then add yung dividend income. Therefore, the parent reported net income of 170,000 and subsidiary reported net income of 50,000. Okay, so ano yung entry ni parent, no? So, ano yung entry ni parent? June 2014. Okay, so, di ba, in our previous video, we've discussed ano yung entry, ano yung entry ni parent, pag cost model, no? Yung method in accounting for investment in subsidiary account. Okay, so first, on January 1, 2014, at the date of possession, of course, di ba yung consideration transferred consists of cash amounting to 300,000, a note payable of 87,500. No? So, yung entry niya is actually debit investment in some company, 387,500, and a credit to cash, 300,000, and a credit to notes payable, 87,500. Okay? So, since under cost model, yung dividend, kasi may dividend, diba? May dividend lagi, declare his subsidiary. May dividend paid his subsidiary of 30,000. Okay? So, since this is actually a 100% acquisition, no? So, 100% acquisition. So, yung net income na i-report, yung dividend income na i-report ni subsidiary, even declared ni subsidiary, will be treated, no, as income ni parent. So since it's 100%, so all its dividend declared, no, ni subsidiary, kay mapunta lahat kay parent. Yun siya. So yung entity is debit to cash, credit to dividend income. Okay? So, we'll have eliminating entries first, diba? Limiting entries. No? So, from the trial balance, di ba, you have here si Sun Company. No? So, si subsidiary, may common stock siya. May common stock na 200,000. Tsaka may retained earnings na 100,000. Kaya nga, diba, its book value is 300,000. Okay? So, first, diba, first entry is to eliminate the equity of the subsidiary, no? Actually, the first three entries is same, yung parang same yung entry natin when we do eliminating entries at the date of acquisition. So, actually, so first is to eliminate the eliminate the equity account of subsidiary. So, yung common stock at 200,000. And then yung retained earnings, the subsidiary is actually 100,000. Then credit investment, okay, at 300,000. Okay. Next is to adjust the book value of the subsidiary to its fair value. So, yung mga undervaluation and overvaluation natin will be recognized. So, or diba, your inventory natin is undervalued by 5,000. Yung equipment natin, diba, is undervalued by 80,000. So, i-debit na lang natin yung accumulated depreciation equipment. Okay? Then, yung building natin is overvalued. No? So, i-review muna natin yung accumulated depreciation niya. And then, yung building account, no, para maging 120,000. So, that's 300 minus 120. So, dapat yung building account shall be reduced by 180,000. Okay? Then, yung bonds payable natin, since that is overvalued, diba? So, The difference between the book value and the fair value is actually a discount on bonds payable amounting to 4,000. And then yung land natin was actually undervalued by 6,000. So, di ba, yung net difference, no, net difference or net undervaluation of our assets and liabilities is actually, or net assets natin is 75,000. So, you just have to check if your debit and credit is equal, no? And 255,000 yung total debit, and then 255,000 yung total credit. Yeah. So, it's a credit to investment in some company, no, at 75,000. Next is to recognize the goodwill, no, at 12,500. So, di ba, we've computed goodwill at 12,500. Okay? Okay, ito yung next entry natin. So, yung next entry natin is actually to amortize. Ito yung entry na natin pag amortize ng excess. Okay? Yan. So, since, no, in relation to inventory, is actually in relation to inventory. So, yung inventory natin, since, no, we're using FIFO, so if we assume that the inventory, no, existed at date of acquisition, was sold, no, at December 31, 2014. So, since ano man siya, diba, undervalued yung ano natin, inventory, then undervalued din yung cost of goods sold, diba? Undervalued yung cost of goods sold, okay? So, recognize cost of goods sold at 5,000, okay? However, diba, we have equipment. So, equipment and building. So, yung equipment natin, we have undervalued yun ng 80,000. Then, diba, its useful life is 8 years. So, may annual, annual amortization of the excess of 10,000. Okay? Then, yung building natin, we have overvalued of 20,000, but its remaining useful life is 4,000. So, therefore, may amortization of excess tayo na 5,000. So, di ba pag undervalued yung asset natin, undervalued din yung depreciation. Pag overvalued yung asset natin, overvalued din yung depreciation. Okay, so parang in-net na lang natin. So, there is a net undervaluation of depreciation expense of 5,000. No? Kasi 10,000 na undervalued yung sa equipment, at saka 5,000 overvalued yung sa building. So, yeah, debit depreciation expense of 5,000. Okay? And then, to record yung isa interest, diba? So, it's a discount, so i-amortize natin siya, no? So, yan siya. 1,000 na amortization. Okay? Then, we'll recognize, no, goodwill impairment loss of 3,000. So, you take note, yung land lang yung hindi natin i-amortize kasi nga, it's a non-depreciable asset. Okay? So, para to summarize, no, so actually the entry for the inventory, so debit ka ng cost of goods sold, credit ka ng inventory. Yan siya. And then, for the equipment, actually you debit ka ng depreciation for 10,000, and then credit ka accumulated depreciation equipment for 10,000. Yung counterpart entry of each of yung undervaluation, no? And then, yung sa equipment natin, no, yung entry kasi should be debit to accumulated depreciation building, credit depreciation expense. So, pero ginet naman natin yung depreciation, di ba, by 5,000. Okay? And then, yung sa bonds natin is actually a debit to interest expense and a credit to discount on bonds payable. Then for the goodwill impairment loss, is actually debit to goodwill impairment loss of 3,000 and a credit to goodwill for 3,000. Okay? Siya. So that's actually 19,000 na debit and 19,000 na credit. Okay? So that's actually the entry to for the amortization of our excess. Okay? Have here also, no, to eliminate the dividend income, diba? So, to eliminate dividend income ni perfect or ni parent, no? So, close lang natin siya by dividing dividend income and dividends paid. So, to eliminate the dividends paid and dividend income ni parent and the dividends paid ni subsidiary. Okay? Yun siya. So, actually in our worksheet, no? So, yun yung worksheet natin, no? So, same thing pa din, di ba? So, when we have worksheet, related sa possession. So, yung worksheet natin, di ba? So, yung balance ni parent, balance ni subsidiary, no? Then, plus or minus yung effect ng working paper eliminating entries. Okay, so, we have here, the parents, sales of 400 plus 200,000 is actually 700,000. Okay? Then yung dividend income natin, di ba, yung dividend income is actually i-eliminate. No? So, dapat sa consolidated, wala na yun siya. Okay? Yung cost of goods sold natin, that's actually 170 plus 115. That's plus yung adjustment natin for 5,000 for the undervaluation of the inventory, that's actually 290,000. Okay? Yung depreciation expense natin, no, may adjustment tayo na 5,000, so naging 75,000. Yung interest expense natin, may adjustment tayo na 1,000, yan. And then, we have other expenses here, and also adjusted goodwill impairment cost of 3,000. Okay? So, the consolidated revenue is 600, and then we have cost and expenses consolidated of 424,000. We have actually that income retained earnings. So this is actually the consolidated net income, yung 176,000. Okay? And to compute for the consolidated retained earnings, no? Yan siya, you have actually kasi ito yung statement of retained earnings, no? Kung ito yung income statement ni parent at siya ni subsidiary, ito naman yung statement of retained earnings, no? Okay, so, we take note that, no, diba, i-eliminate natin yung retained earnings ni subsidiary, no? So, ma-forward na lang is ang kay parent. And then, net income na na-compute natin, diba, that's 176,000, okay? Then, since, diba, yung dividends paid ni subsidiary is eliminate, so ma-forward na lang ang dividends paid is kay parent. So, then, we have actually retained earnings and consolidated of 416,000, okay? So that's basically net retained earnings beginning ni parent plus consolidated net income attributable to parent less dividends declared ni parent. You have your retained earnings. And okay. For for asset account, same thing pa din, no? You have to add, no, the balance ni parent for the subsidiary, no? So for example, for cash, 120 to 500 plus 75, that's 197, 500. For inventory, that's actually 75 plus 50, that's actually 125. And for inventory, we have 100 plus 75 plus yung adjustment natin for inventory, nag-debit, let's say, nag-credit tayo ng 5, so that's 175. Kasi inventory na fully amortized na siya on the year. That's why yung entry mo to adjust the fair value, then ma-amortize na rin yung excess at the year. So unlike with depreciable assets na yung amortization of the excess is over pa until its remaining useful life. Okay? Or same thing with bonds also. Pero itong inventory na-amortize na siya, no, within the year. Okay? Yung land natin, no, you have, diba, undervalued by 6,000, no, so that's 175 plus 40,000 plus 6, you have 221,000. So, wala tayong amortization for the excess, diba, of the land. Okay? So, yung equipment natin, that's actually 200 plus 150, 350. And then, yung buildings natin, that's 600 plus 450 minus 180, we have 870. So, yung excess amortization natin dito, diba, nasa accumulated depreciation. Okay? Yung discount advance payable natin, you have 4,000, no? And then, we have amortized na 1,000, so the balance is 3,000 na lang for consolidated. Okay? So, parang every year kasi, mag-amortize ka. No? Until such time na ma-fully amortize na yung excess. Okay? So yung goodwill natin, we have recognized 12.5, but we have impairment loss of 3,000, diba? So we have 9.5 na lang. Then, yung goal natin, diba, in prepare limiting entries is to recognize goodwill, diba, and to eliminate investment account. So dapat, yung natin, investment account pa-eliminate to, diba? So, based on our working paper enabling entries, so worth 200,000, 75,000, and 12.5, no? So, actually here, ma-eliminate na yung investment account. Okay? We have here, accumulated depreciation equipment, no? So, that's actually 112,500 plus 80,000, minus 80,000 plus 10,000. That's actually 122,500. Okay? So, yung buildings natin, 337,500 plus 240,000 less 160 less 5,000. Okay? Actually, 412,500. Okay? Yung accounts payable natin, that's actually 100,000 plus 100,000, that's 200,000. Okay? Yung bonds payable natin, that's actually 200,000 plus 100,000, that's 300,000. Okay? Yung common stock natin, we have 500,000. No? So, kasi i-eliminate natin yung common stock ng subsidiary, di ba? So, forward na lang to the consolidated balances is actually 500,000. Plus yung retained earnings natin na 416, it's actually from statement of retained earnings na 416,000. Okay? So you have it. This is actually our worksheet. No? So, yan siya. So, other way of computing for our consolidated net income, diba? So, yung formula na i-provide natin, so, yung net income ni subsidiary, that's 170. Then, ang net income ni, parent is 170. Then, kay subsidiary is 50,000. So, we have 220,000. Then, diba, i-deduct natin yung dividend income. We determine the net income from one operation to parents of 140 plus 50. So, we have 190,000. Then, yung excess natin, amortization, for inventory, that's undervalued by 5,000. Yung equipment natin, undervalued by 80,000, diba? Pero is remaining life is 10,000. We have 10,000. So yung buildings natin is actually overvalued by 20,000. So that's actually may 4 years na remaining useful life. So we have 5,000 as excess amortization. Yung bonds payable natin, diba? That's overvalued by 4,000, divide 4, so 1,000 lang yung amortization. Okay? Then we have impairment loss. So since it's a 100% owned acquisition, so therefore yung mag-share, mag-absorb sa impairment loss is the parent. Okay, so we have here the consolidated net income, no? So since this is actually already attributable to parent kasi all the net income naman of the subsidiary shall accrue to the parent. Kasi it's 100% acquisition. Okay, so walang non-controlling interest. Okay, also to compute for retained earnings, actually it's the same with the statement of retained earnings in the worksheet. So yung retained earnings beginning the parent at 300,000 plus net income attributable to parent na 176,000, and then less even declared for 60,000, you have 416,000. Okay, as your retained earnings end. Okay, so actually to prepare your income statement, so these balances were taken out in the worksheet na income statement column. Yan, it's actually 176,000. Yan. Then to prepare for balance sheet, there's actually all the balances, nasa worksheet natin. Yan. Okay. Yung sa consolidated column of your worksheet. So, refer. Yan siya. Okay. Then, you can now prepare your consolidated balance sheet. Okay. So, just make sure na balance siya. Okay, diba? Yan siya. So, yung cash, 197,500, AR, 125, inventory 175, land 221, yung building cost less accumulated, this is book value, equipment cost 350 accumulated 122,500 is book value. Okay, to 7,500. Yung goodwill natin, 9,500. We have total assets of 1,413,000. Okay, yung accounts payable natin, 200,000. Again, this were taken in our worksheet, diba? Okay, yung balance payable natin, 300,000, pero may discount tayo na 3,000. So, it's carrying amortization effect, 297,000. Okay, may common stock tayo, na 100,000, and retained earnings consolidated of 416,000. So you have total liabilities to shareholders' equity of 1,413,000. Yan siya. Okay. Next, we have here what if no subsequent related acquisition. Okay, so you have here the balances, the net income of the parent and the subsidiary. Okay, in the second year, no, or second year after the acquisition. So we have here the parent reported net income of 200,000, and then the subsidiary reported net income of 75,000. So that's actually perfect and son, no? Yeah. Okay. So yung entry, no, ni parent for the whole year is actually to record the dividend income. Debit lang siya ng cash, credit dividend income of 40,000. Actually, that's actually 100%. Yan. 100%. So diba it's 100% acquisition. So, yung i-declare ni dividend sa subsidiary, so, mag-accrue yun lahat kay parent. Okay? So, for eliminating entries natin, no, so take note na, okay? So, actually, our first entry is to provide entry to convert from the cost method to equity method, or the entry to establish reciprocity at the beginning of the year 2015. So actually, you are to consider lang, no, so how much is the increase, no, in the retained earnings of the subsidiary. So, diba? So, yung beginning of retained earnings is, yung beginning of retained earnings of the subsidiary is actually 100,000. No? But it's based sa ano, kasi, diba, based dito sa ano, a previous year financial statements of the subsidiary, may 120,000 siya na may beginning balance siya na 100,000 tapos ending balance na 120. So nag-increase siya ng 20,000, 'di ba? And since the working paper limiting entries are for for consolidated purposes, no? So mag-adjust tayo, no, for the increase in the equity or the retained earnings account, no, ni subsidiary, no? And that's actually 20,000. No? Okay. Our second entry is actually to eliminate the equity of the subsidiary. You take note that 120 na yung ano niya, retained earnings. It's actually common stock of 200,000, retained earnings of 120, and investment in Sun Company amounting to 320,000. Okay, another entry for the excess. That's actually the same entry we have the previous year, also to recognize goodwill. Okay, ito lang po, actually to recognize the amortization of excess. Okay, yung amortization of excess, diba? So actually that's actually for 2 years na, for 2014 and 2015. But yung amortization for the previous year actually is i-debit natin sa retained earnings. Okay? Kasi diba, yearly, may amortization tayo na last year may amortization tayo na 11,000 plus 3,000 for the goodwill. Okay? Okay? So, take that now. So, yung total amortization natin is actually 11,000. So, last year, plus the goodwill na impairment loss of 3,000. That's why we have retained earnings here, 14,000, diba? Yan. So, for this year, so same thing pa din, yung depreciation expense natin, no? Will be debited at 5,000. This is actually the net na ito ng kay equipment at kay building. Okay? Then, to recognize din sa interest expense na 1,000. Okay. So, ito siya, no? So, yung sa inventory, di ba, may 5,000. So, ito included na ito siya. Dito sa 14,000. Then, inventory 5,000. Yung sa equipment naman, di ba? So, may 10,000 this year and then 10,000 previous year. So that's actually 20,000. That's why we have accumulated depreciation of 20,000. Okay? For the building naman, that's actually 5,000 for this year. No? 5,000 this year, then 5,000 last year. That's why we have accumulated depreciation of 10,000. Again, yung last year na amortization, we've recorded here the retained earnings account. Okay? And then, yung bonds payable naman natin, di ba? We have, for the current year, we have interest expense. The previous year, 1,000. That's why we've credited discount bonds payable na at 2,000. Okay? So, and then, of course, the goodwill will be credited at 3,000. Kasi nga, my goodwill impairment loss last year and 3,000. No? So, bearing effect nun, we have here, debited at 14,000 sa retained earnings. Okay? And also, last entry is to eliminate the dividend income and dividends paid for both the parent and the subsidiary. Okay? So, in our worksheet, yan siya, yan siya. So, same thing pa din, no? Yan siya, just have to add the accounts, no, of Perfect and Son. Yan. Then, of course, we'll eliminate, diba, dividend income. So, yung sales natin, 450%, that's 450,000 plus 300,000, that's actually 750,000, okay? Then, yung cost of goods sold natin, so, wala na adjustment dito, diba? Kasi, yung undervaluation of inventory was recognized na last year. So, yung depreciation expense natin, that's actually 5,000. It's actually, di ba, sum of the parent and the building and the equipment. Yan siya. Then yung interest expense natin, yan siya, that's other expenses. So, ito yung consolidated column, that's actually the sum of the accounts of parent and the subsidiary plus the amortization of the excess. Yan. So, you have here, your consolidated revenue is 750, and then cost and expenses 521. So you have net income to retained earnings of 229,000. Okay, so diba in our entry, no, we've debited from 14,000 is actually the amortization of the excess and the goodwill impairment loss previous year. Then yung entry natin to convert from cost model to equity model is actually 416,000. So if you've noticed, diba, the 416,000 is actually the consolidated retained earnings last year. Okay, so the purpose yung eliminating entries natin nito is to convert, no, the perfect reported net retained earnings at the separate financial statements to the consolidated beginning retained earnings of 416,000. Kasi diba, as I have said kanina, yung working paper eliminating entries natin is only for consolidation purposes. So it will not affect the balances of the separate financial statements of the parent and the subsidiary. Okay? Siya. So you have actually here, no, 410,000, no, less 14 plus 20, that's 416,000. Okay? Yan siya. So, plus the net income, no, attributable to parent or consolidated net income, that's actually here, 229,000. And then, diba, eliminate natin yung dividends paid, yung dividends income na 40,000. So, 60,000 na lang yung ma-forward for the consolidated column. Okay, so we have retained earnings of 185,000. Okay, then for the consolidated balance sheet, it's actually the same. Add mo lang yung balances for the cash. Yan. For accounts receivable. For inventory, yan siya. Fully amortized naman yun siya. So, itong entry for the undervaluation, it is actually for the excess amortization. Yung land natin, yan, actually 175 plus 40 plus 6 yun siya. Yung equipment, no, i-add mo lang yung building, then 600 plus 450 less 180, that's actually 870. Yung discount advance payable natin, di ba, may overvalued yun ng 4,000, pero since this are close second year, so 2,000 na yung yung accumulated amortization of excess niya. It's actually 2,000 na. Okay? So, until such time, di ba, na fully amortized na yung excess. Okay? Yung goodwill natin, that's actually 12,500 plus 3,000 na impairment. And then, yung investment in some company, di ba, dapat ma-eliminate yan siya. No? So, we'll try to consider if ma-eliminate yan siya based on our entries. No? So, we've credited 20,000, we've credited 75, we've credited 12,500, and we've debited 20. Okay? So that's 87,500. Therefore, na fully amortized na yung, fully eliminated na yung investment in some company natin. Okay? Yan siya. Then yung accumulated natin is actually 125 plus 85. Diba? No? Na balances ni parent, the subsidiary, less the, ito yung undervaluation natin, plus 20,000, they have 150,000. Okay? Yung accumulated depreciation buildings natin, 375 plus 255, less 160, less 10, no? You have 460,000. Okay? Siya. So, yung accounts payable natin, you have 100 plus 100, that's 200,000. Bonds payable, 300,000. Common stock, 500,000. Ito, may eliminate pala itong si 200,000. Yan siya. And then, your retained earnings from above, that's 585,000. Okay? Yan siya. So, actually, ito yung, diba, ito lang naman yung trial balances or income statements, the retained earnings, and balance sheet of the parent and the subsidiary. Then we plot lang naman, diba, our eliminating entries, no? Then to get the consolidated balances. Okay? Okay, so to complete for the consolidated net income natin actually, no? Another way, no? So that's actually the net income of the parent plus the subsidiary less dividend income, diba? So you have net income from own operation compared to 160 plus 75 is subsidiary plus 235. And then yung amortization of excess natin, of course, wala yung sa inventory, no? Kasi na-amortize naman siya last year. So yung sa building na lang, diba? So yung sa equipment, no? Kasi nga it's diba 80,000 divide 80,000 divide 8. Actually, 10,000. Since that is undervalued, diba? So, undervalued yung depreciation. So, therefore, overstated yung net income. Yung building naman, diba? It's actually 20,000. 20,000 divide 4. Diba yun, no? Because this is overvalued yung depreciation. Therefore, understated yung net income. So, you add mo yung 5,000. Yung bonds payable is actually the amortization of your discount. Diba? 4,000 divided 4. That's actually 1,000. So, since this is discount, diba? It's addition to 8 years expense. So, yung net income natin is reduced by 1,000. So, you have here, consolidated net income of 229,000, diba? Okay. Yan siya. And we have here, to compute for your consolidated earnings, actually same lang din yung sa worksheet natin. Yung retained earnings beginning ni parent, consolidated pala, that's for 16,000 plus net income attributable to parent, that's 229,000, diba? Plus dividends declared to parent, 60,000. You have consolidated retained earnings end of 585,000. Okay? Diba, if di given yung retained earnings, so yung retained earnings nag-report yung subsidiary at 410,000, diba? Yan siya, 410,000, no? And to compute for its diba, is yung net increase sa net income ng subsidiary, less yung amortization of excess. So we have net increase of 6,000, diba, times 100%. Yan. So, ito yung consolidated retained earnings beginning. If ever di given yung for 16,000, no? Another computation for 16,000. Actually, naka-reflect din yun siya sa ating eliminating entries. Is actually, diba, ito yun, 20,000 and 14,000. Yan. Okay, so, to prepare for the income statement is actually, mag-base ka lang sa natin, worksheet. So, net income of 229,000, no? Actually, 229,000. And for the balance sheet, it's actually December 31, 2015. Yan. So, mag-refer ka lang din sa ating worksheet. So, mas better yung we have a worksheet para madali natin i-prepare yung income statement natin at saka yung balance sheet natin. Okay? That's actually the end of the so the example for 100% owned acquisition pero cost model. Okay, so in our next video, shall we discuss what if the parent used equity model in accounting for the investment in subsidiary account, no? And ano yung difference ng working paper emitting entries, no, in whether it's cost model or equity model. Okay? Or mag-differ ba din ba yung consolidated balances, if it's equity model or cost model. So we'll have that in our next video. Okay, so thank you.